YouTube to link. Okay, it's working now. Okay, hey everyone. Hey, hey. There seemed to be a slight delay. Hey, hey everyone. Okay. I don't know what's going on because I'm talking already and I have the YouTube live on as well. And it seems like there's kind of like a 5 to 10 seconds delay from the time I speak and from the time YouTube hears my voice. Okay, hey Sai. Hey Baptiste. Hi, from France. Wow. Hello, hello. Just wondering where everyone is from. Okay, this thing is not in full screen. I'm not sure why. Okay, I'll just leave it at this size of screen. On my computer, it's actually full screen, but I don't know why. On YouTube, it's not full screen. It doesn't matter. We'll just continue as long as you guys can see my screen, right? Just want to double confirm. Everyone can see my screen and everyone can hear me, right? Hey, oh wow, London. Oh, I really miss London, Martha. Said. I don't know if I'm pronouncing your name correct. Is it Said or Said? Is it the first one Said or second one Said? Like the English, I don't know. You guys are from Europe, so I'm guessing it's really early for you guys right now. It's 5 p.m. here in Singapore, right? Yeah, so I'm gonna just move on with the introduction, or should we get? Actually, maybe we should give everyone else a minute to join. I'm not sure why these slides are not going full screen. It should be going full screen. On my side, it's full screen, but I'm on YouTube Live. Said, Said. So it's Said. I hope I'm pronouncing like right. I hope ID is it, right? Id, Said. I'm not sure. I'm so sorry. Okay, we'll just start the webinar and then whoever wants to join can join. Oh, so it's Said, Said, or Said. The second one. Okay, number one, Said, or number two, Said. Okay, you know what? If I said Said or Said, you know I'm calling you. Okay, so let's just start the webinar and whoever's joining will join, I guess. It's scary because last week we did the webinar and then when I'm looking at the people who attended, it was only like less than 10 people. And then by the end of the webinar, there was 2,000 views. So I think YouTube has the numbers wrong. You got this. YouTube may have got the wrong numbers wrong, but doesn't matter. Right here, I can see a few of you. I don't really see my regulars other than Martha. I think Martha is a regular, right? The others, I'm not sure if you guys are having trouble looking for the link, but you guys are here every week, and then suddenly we move to YouTube, and I don't see you guys anymore. So I'm not sure, is it a link problem or something? Okay, so anyways, thank you for joining our webinar today. We are, of course, doing this webinar for Vantage Markets. Okay, so let's just do a really quick introduction so that we can spend a bit more time on the charts today. Because I'm not sure if you guys know, lately the charts have been acting a little weird, especially with the news yesterday, especially the US pairs. But you guys are mostly from Europe, so I don't know if you guys avoid the US pairs or if I don't know what pairs you guys usually trade. Okay, so that's that. Let's meet the team. So this is our team. We are from Everest Fortune Group. So if you're wondering what's Everest Fortune Group, we are a basically we are a fintech company based in Singapore. We do a lot of research on forex, equities. We do a lot of advising for brokers, banks, hedge funds. We do a lot of webinars. Okay, so today we're doing a collaboration with Everest Fortune. We're doing a collaboration with Vantage to do this webinar so that we can bring you guys the good stuff. So a little introduction about our team. You guys may have met Desmond last week because I wasn't around, so he took you guys. So Desmond is our CEO here at Vantage, and he basically taught us a lot of what we know. He's a very good trader. Okay, that's all I can say. He's a very good trader, and he has taught us a lot about trading. And one particular style of trading that he has taught us is called the Nike tick, which I can share you guys if I spot it later on the charts. But if I don't spot it, then I won't be sharing today. Okay, so then we have me, for those who don't already know me, because like I said, a lot of my regulars, a lot of you are regulars. I see you guys every week. You guys are so like consistent with this webinar. You should be proud of yourself. Okay, those who don't already know me, my name is Cassandra, or you can call me Cass. I am a prop trader / investment analyst here at Everest Fortune Group. So I trade. Other than trading, I also do a lot of research on where the markets are going, and I also publish a lot of my findings, okay, for where I think the markets are going. So in terms of my experience in trading, I have been trading for a few years now, and what I can say about myself in terms of trading that I think speaks very loud is that I passed FTMO and my Forex fund like 4 times. Hey, Jacob. Okay, another regular is here. Hey, Jacob. Okay, I'm not sure what's going on. Okay, so on my YouTube, on my computer, I can see Jacob saying hello, but YouTube on my phone, I don't see a hello. Okay, doesn't matter. I'll just, as long as I see it somewhere, I'll just reply you guys. Technology nowadays, right? Okay, anyways, I've passed my Forex fund and FTMO 4 times. So for those who don't know what my Forex fund and FTMO is, it's basically a prop trading test that requires you to get 10% in profit within the month. Okay, so they have other strict rules like you cannot have a drawdown of more than 5%. If you have a drawdown of more than 5%, they immediately take your account away from you. Okay, so I've consistently done that like 4 months in a row to pass this, and I've been consistently trading for FTMO and my Forex fund as well. Profitable, of course. So I think that says a lot, and why I think that says a lot is because if you guys just Google, I don't want to scare you guys. Again, I don't ever want to scare anyone. This is more to tell you guys that you guys shouldn't think that this is a get rich quick kind of thing. A lot of people jump into Forex and like trading in CFDs thinking like, or crypto NFTs thinking like, oh, I'm gonna get rich tomorrow, because you only hear the success stories. But what I want you guys to be wary of or be cautious about is that if you do Google, just Google like how many retail traders are actually profitable in the world. There's only 4% of profitable retail traders in the world, and 96% of retail traders are actually not profitable. So this is not to scare you or discourage you, but rather it is to encourage you to learn the basics properly and to get all your foundation right before you jump into trading with your hard-earned money or your savings or whatnot. And it's also to remind you guys to always diversify, because even the best traders in the world can lose. So I do encourage you guys to diversify. Let me see. So I'm sorry if I'm pronouncing your name wrong. Baptisti. I'm sorry. Okay, I saw many of your webinars and understand the concept. I'd like to know how you enter a trade and why. What is the process after the fifth level? Okay, yeah. So we will be looking at, that's the whole point of today's webinar, which is Trading Strategy Clinic. Okay, so Trading Strategy Clinic is basically the strategy that I use to get into trade. So I have different strategies I use. I have to look at a chart to know which strategy fits the best. But if I look at a chart and I realize that none of my strategies work on that particular chart, I just go next chart. I stop and I go next chart. I'm not going to chase the trade for that chart. And why I do that is because there's so many instruments and there's so many pairs for you to trade. So if you don't see a setup on a particular pair, don't force it. do not force it. It's not worth it because you're going to end up, chances that you're going to end up losing your funds. Okay, so other than that, we have my colleague Vico, who you guys have probably not seen. She does these webinars for other brokers, but not for Vantage. Okay, disclaimer, you guys know how this works. Like I said, again, trading is not suitable for everyone. Actually, I do think trading is suitable for everyone. Okay, but I think it's only suitable if you put in the time and effort to learn the skill properly, right? Hey, welcome to our webinar. Okay, so again, I want to remind you guys that whatever I share in this webinar does not construe trading advice. This is not a signals group. This is not a forecasting group, okay? This is basically, we can consider this a sharing session. I'm just sharing with you guys what strategy I use to look for trades. And hopefully you guys can implement that strategy into your own trading style. And why I'm even sharing this strategy is because this is a strategy that we have back tested and we have found to be effective, and this current point of time and this current market conditions, I am still able to be profitable. Okay, I say that with a lot of humility because anytime I realize that you are very proud, let's say you win, you trade forex or whatever it is you're trading, and you win and you celebrate, you're like, oh, I make so much money, blah blah blah. I realize the markets will tend to humble you. Okay, so even though at this current point of time I am still quite profitable, I will always say I am profitable at this current point of time, and my strategy is working at this current point of time. Okay, so I don't want to change it. But that being said, it's never going to wait for anyone. The market is never going to adapt to anyone. You to the market, okay, and you need to find that strategy that works for the market. So risk warning again: trading trading FX and CFDs carry significant risk, especially if you are trading on margin. Please do not put your life savings into this. Do not sell your kids. Do not sell anyone to put your do not put your anything other than the funds that you are willing to lose. Okay, yeah, please be cautious, guys. I really urge you guys, although I do agree that trading can make you a lot of profit and money, and it can give you an amazing lifestyle if you know how to do it properly, but at the same time there are more people losing than winning, so please be cautious. Okay, okay, so that's that with the introduction. If you guys have any question at any point of time, you guys can ask at any time in the chat box and I will answer you guys. Okay, give me a sec. I'm just gonna share the screen for TradingView. TradingView, let me see, how do I share the screen for this? Okay, can everyone see my TradingView screen? Everyone can see my screen, right? Everyone can see my screen? All good? Okay, thank you. Thank you. I mean, I myself am on YouTube and I can see the screen, so I'm assuming, hey Sarah, I'm assuming everyone else can see my screen as well. Okay, if anytime you guys have any requests for any particular instrument or pair you want me to do an analysis on, you can request right now. And thank you, Jacob. Thank you, Said. I'm sorry, Said. And Baptist. Okay, I'm sorry if I'm pronouncing your name wrong. Okay, if you guys have any requests on any pairs or instrument, please request right now and we'll go into it. Okay, whenever you guys request for something, I just want to quickly find out if you're requesting it because you are already in this trade, or is it because you just want a second, or you're looking to get into this trade and you just want like a second opinion of where you think the market is going. Hey Lily, welcome back. If you're already in that trade, you can let me know where you got in, what your biases, and we'll try to see if I can find something to, maybe give you a peace of mind. But of course, if I see it's in a different direction, I'm not gonna like lie to you either. Okay, you're just looking for an opinion. Okay, EURCHF request from Jacob. I'm assuming I don't know for sure because I didn't ask you guys. I'm assuming most of you here are day traders, right? So we have the scalpers, the day traders, and the swing traders. I myself am a day trader. So usually the time frame I look at is the 4 hours and the 1 hour. Okay, I don't really look at the daily. I only look at the daily to look for reference or trend direction. But other than that, I don't really look at anything more than 4 hours. So if you are a day trader, if you look at anything more than the 4 hours, even the 4 hours, sometimes the trade can last for up to 2 days. Okay, and if you're someone like me who keeps constantly going back to check the trade, and you're like, oh my god, has it reached my take profit? Has it reached my stop loss? Maybe one, you can work on your trading psychology. Two, maybe go into scalping, because then scalping you won't have any trades running, right? Okay, so I'm a day trader. I usually look at the 1 hour to get in for my entry and 4 hours as a reference and the daily as a reference as well. So I'm going to start with the daily. Because I see that there's a lot of new joiners today. I don't know if you already know how my strategy works. Okay, but the first chart we go into, I'm going to have to explain step by step to be fair to those who are new here. For the regulars, I'm sorry. I know this is, you guys already know how this works. Okay, but for the new ones, what I usually do, I go on a daily to look for trend direction. So trend direction meaning I want to see if charts is going up on an uptrend or a downtrend. So right now, looking on the daily, there is a downtrend. I do see a downtrend. Okay, higher highs. Oh, sorry, lower highs, lower highs. This part didn't really go lower, and lower lows, but this part didn't do a lower low. Okay, so if you're looking closely, Euro, Swiss franc is not really giving us a lot of information. If anything, from this part onwards, it started to move sideways. Okay, it started to move sideways. Sideways markets are good for people who play rectangles. They play the rectangle strategy. That's also a strategy that I use. So how you play a rectangle is you look for the support and resistance. Okay, so that top part is your resistance, the bottom part is your support. Usually when I consider support, I would much prefer if there are more touches, but at this point in time, there's only one touch. Okay, if not, I do see a possible triangle. Don't know if you guys see that. Okay. Okay, so for EUR CHF, unfortunately, I cannot find a very obvious trend. Okay, if anything, I'm a bit more biased that it's a downtrend. Okay, I'm a bit more biased that it's a downtrend because of this is what it looks like, right? So on the longer term, it's a downtrend, but on the very short term, it looks like there's an uptrend right here. So do you see that? So the first thing you want to identify is trend, okay? Because I feel like just by identifying trend alone, you are winning a lot of the battle already. Okay, so you want to identify trend, and then you want to try to get in on an entry that is following your trend. So if you think it is an uptrend, you want to look for a buy entry, and if you think it's a downtrend, you want to look for a sell entry. I mean, at least that's how I play it. Okay, guys, another disclaimer. Whatever, is there a head and shoulder pattern form? I'm trying to look for the head and shoulder. If you're talking about this is a head and shoulder. Nice catch, Jacob. This is a head and shoulder. Yep, that is a head and shoulder. Okay. Just give me a sec. Sorry. Okay, the chat on YouTube is not moving anymore. Let me just restart the link. I'm so sorry, guys. I don't have two monitors today. I only have one, so that's why I have to use my phone as the other one. Okay, so how the head and shoulder is good, that means this may be a continuation to the upside, right? Okay, nice catch, Jacob. That is a nice catch. It's an inverse head and shoulder. So one thing now, we have a bias. So usually when I look for my charts, what I do is I look for trend, number one. Number two, I look for support and resistance. Number 3, I look for Fibonacci levels. Number 4, I back up my indicators. And along the line of 1 to 4, if any time, like Jacob, he spotted like a pattern, okay? He spotted like a pattern. He spotted this head and shoulder right here. Okay, I will take that into consideration of what my overall bias is. So because of this head and shoulder, I'm immediately a bit more biased to bullish, okay? Because how the head and shoulder pattern works is it does a head and shoulder, and then here there's a break, and then it will go up to the other side. If the head and shoulder was the other way, okay, if it was the other way, for example, this, I don't know if this is a good drawing of head and shoulder, you will notice a downwards, a continuation to the downwards. Okay, so that's a head and shoulder pattern that we can take note of. That's one thing. Second thing, one take note of, we just want to highlight some of the levels. Okay, so why you're highlighting horizontal levels, which is support and resistance, because those levels will be either your entry, your take profit, or your stop loss. Okay, so that's the only reason we highlight levels, because we will use that as entry, stop loss, or take profit. Other than that, it's just a good reference of where you think there will be resistance on the chart. Okay, so I'm just gonna highlight, other than that head and shoulder, I'm just gonna highlight some support and resistance. So I'm gonna put this as second support. This will be our first support. Okay, I label it this way so it's clearer for me. Okay, so that when I look at the chart, it's cleaner and it's more organized. Okay, so right now, we're expecting, because of this head and shoulder, sorry, the chat disappeared again. Okay, because of the head and shoulder, we're expecting a break here, a retest, hopefully a retest, and then can get in for a buy here. Okay, and our take profit is the second resistance. Okay, so that's just a bias. Whenever we have a bias, we need to have reasons why we have a bias. So our bias right now is 1, the head and shoulder. 2, because on top of the head and shoulder, there's actually it seems like there's a forming triangle. Okay, no, there's no triangle, or rather it's a very badly drawn triangle. So triangles, whenever we draw a trend line, we want it to have at least 3 touches. Okay, 3 touches. So there's 1 here, 2 here, and then this third one like didn't really touch. So it doesn't make me, it makes me feel like this triangle isn't that valid. Okay, but anyways, let's say it did touch. Okay, we'll just leave that there as reference. Okay, because sometimes it can miss. The best case scenario is if it touches, but in this case it didn't touch. Okay, so one thing about triangles that look like this, do you guys see this triangle pattern? This triangle pattern here. Okay, one thing about triangle patterns is that usually price tends to break at the swing high or the swing low area. Okay, so this kind of triangle, there's like 3 kinds of triangle, right? There's the triangle that looks like there's a descending trend line and there's an ascending trend line. But the triangle that we have spotted right now is a horizontal line and an ascending trend line. Okay, so there's a difference. There is a difference. Okay, so usually when they are this kind of triangle, the breakup usually happens at the top, where the horizontal area is at. That's where the triangle usually breaks up. So that is actually supporting our argument that we are looking for a buy, because the head and shoulder is usually a continuation of the buy, right? So this head and shoulder can signify continuation of buy. On top of that, we have the triangle also supporting our argument that there might be a break here and a retest. Okay, so it's just based on probability. It's just most of the time the break of such triangle happens at the horizontal area of the triangle. Okay, when the triangle is both a descending trend line and an ascending trend line, the break can happen on either way. Okay, it can either break on the top or the bottom, but in this case, we have 1 horizontal. What I've found in the past and what I've back tested, the break usually, more times than not, breaks at the horizontal area. So we now have 2 supporting arguments of why we think price is going to break in this area and why we can enter for a possible buy. Okay, so right now this is just a bias. We need more confirmation. Okay, we have two reasons why. Let's try to look for, oh, sorry. Usually I would pull out the Fibonacci levels to back up, to look for the strength of the first resistance, right? Okay, usually I want to find confluence at my support and resistance, but at this point of time, I want price to break. I want price to break so that I can get in for the buy. Okay, so let's just pull out the Fibonacci level so that we can see how strong this first resistance is. So even though there's a head and shoulder, and even though there's a triangle here that is indicating or giving us a signal that price is going to break to the upside, right? We want to see how strong the resistance is, because if this is a very strong resistance, let's say we pull out all our Fibonacci level and it turns out there's 10 Fibonacci levels, unlikely, but yeah, in some kind of scenario, there's 10 Fibonacci levels lining up in the first resistance. That's already going to signal to us that this is a very strong resistance. If it's a very strong resistance, it means price is going to have a hard time breaking through, and instead it's going to reverse, right? Okay. So the key question you want to ask yourself whenever you're looking for a setup or a trade is, one, this is a thing I always ask myself, and I think it's very important. Is it going to break or is it going to reverse? Okay. To answer your question, you just need to use those steps that we have gone through. The trend line, whatever patterns you see, support and resistance, Fibonacci levels. Okay, these are the things that will help you answer your questions. Is it going to break or is it going to reverse? Because if you find that it's going to break, that means you can enter for a buy. If you find out it's going to reverse, means you can enter for a sell. Okay, so let's try to see if there are more things lining up here. Okay, there's Fibonacci, 61.8 Fibonacci retracement lining up there. There's a 61.8 Fibonacci projection lining up there. There's probably going to be more retracements if I take it from this swing high. Okay, there's probably going to be another projection lining up here. Yep, there is. It's lining up in the same area. Let's see if we can find an expansion. Probably not, but let's try anyways. So expansion are the levels below 0. Okay, below 0. Okay, nope. The expansion and negative 27.2 is too far up. We're not even going to use this. Okay. Okay. Actually, if we didn't spot this head and shoulder and we didn't spot the triangle, I would immediately have a very strong bias that this is a sell. Okay. Why I have a bias that this is a sell? Because one, price came here 4 times. It came here 1, 2, 3, and this is the 4th time. And it's having a hard time breaking this area. Okay, it looks like it's a very strong, heavy door, and price is having a hard time pushing through. Okay, so price has come here 4 times and has not successfully broken this area. Okay, that's one. Number 2, there's a Fibonacci projection and a Fibonacci retracement lining up in the same area. So this is the problem right now. The problem is if we are based on horizontal levels, which is the swing high and the 2 Fibonacci levels, 3 Fibonacci levels, right? It is telling us that it is a sell. It's telling us that this is a very strong resistance and you should enter for a sell, okay? But if we are considering the head and shoulders, and if we are considering that a lot of times triangle breaks on the horizontal part, it's immediately a break and a buy, okay? So what we can do now is try to add in indicators to see which side we are more swayed to. Okay, at this point of time, I'm kind of 50-50 because they're both saying different things. Okay, let's pull out indicators. The indicators that I usually use is Ichimoku, stochastics, and RSI. And I have recently found that MACD works very well as well. Okay, so let's see what these indicators. Okay, MACD is not in my list. Okay, let's see what these indicators are saying. Okay, let's look at Ichimoku first. Ichimoku isn't saying much. Why am I saying that Ichimoku isn't saying much? It's because price is moving sideways. Ichimoku does not work on sideways market. Okay, immediately Ichimoku cannot give you any relevant information. You should get rid of it. If a particular indicator is not working well on a particular time frame, a particular pair, get rid of it because it's going to confuse you. The only thing it's doing is confusing you and making you have prejudice of things that are not even supposed to be. Okay, second thing, stochastics. So how I use the stochastics, I turn it to 21, 5, and 3. That is the normal settings that we use, okay? And then how we use the stochastics. Usually you go on YouTube, you read like how people use stochastics. They use it by seeing when price crosses this 80 line. You see this blue box? When price is above this blue box, which is 80, they think that it's overbought, and overbought means that it's time to enter for a sell. And then when it's below 20, they think it's oversold, and they enter for a buy. Okay, but how I use the stochastics, which I find is effective as well, I use it as support and resistance. Okay, I use it as support and resistance. So my support and resistance can be anywhere on the stochastics. It doesn't have to be above 80. It doesn't have to be below 20. It's just anywhere on the stochastics. Okay, I remove everything else other than the K. Oh, yikes. Where did that come from? Sorry, clicked something. Okay, I remove everything else other than the K so that I have a better view. Okay, and I try to get the last swing low. Swing high. And then I get the next swing high because it looks like price has broken the swing high already. So I go to the next swing high. Okay, if I'm using stochastics, this is kind of like a divergence. Okay, this is kind of like a divergence. Okay, why? Because on the charts, every time, sorry, I'm going to get rid of this so it's clearer what I'm trying to say. Okay, every time, I'm going to take my horizontal vertical line. Every time price came to this resistance area on the stochastics, on the chart, price is related to it, inversely, it's correlated. So it reflects exactly what the chart is doing. Here, the charts reach the swing high, the stochastic charts reach the swing high, and it reverses. On the chart, it reverses as well. Here, the charts, price on charts reach the resistance again, and on the stochastics, it reached the resistance again. It came down, and on the stochastics, it came down as well. The third time, it came to the resistance as well, and on the charts, it came to the resistance as well. And when it reversed, on the stochastics, on the charts, it reversed as well. Okay, this is the problem right now. The fourth time, you need to zoom in. You need to zoom in because you might miss this. Okay, do you see that price broke that resistance area? Do you see that little break there? On the charts, price has just arrived at the resistance, but on the stochastics, price is breaking the resistance. So one thing I find good about stochastics, RSI, and MACD, it's very good at looking for breakouts. Okay, so right now, based on stochastics is saying that this is a buy. Okay, stochastics is not agreeing anymore that this is a sell, it is a buy. Okay, because of that little break there. You might miss it, but it's there. It's really, there's a break right there. Okay, so that's one, that's stochastics. RSI, let's see what RSI is doing. So RSI, I usually use it as a trend. I usually look for a descending trend line or an ascending trend line. That's the only way I look for an RSI. I use the RSI. I also use it to spot divergences. Okay, divergence meaning if on the charts it's going on an uptrend, on RSI it's going on a downtrend, it's showing me that there's a possibility of trend reversal. For those who don't understand what I'm saying, I have to say I cannot explain it to you right now because it's a whole topic on its own. Okay, so for the RSI, I go to settings, I get rid of everything other than the RSI so that it's clearer, because we don't want all those, the background, we don't want all those colors and all those other lines confusing us. We only want to use what we think is effective, right? Okay, if it's not effective, don't use it because it's just going to confuse you, right? We need to cancel out the noise. It's just like life, you know. You need to cancel out people or like things that don't make sense. Okay, so let's see how well RSI is working. Okay, RSI is just saying that it's on an uptrend. It's just a slight uptrend. Other than that, I don't really see a divergence. Again, if you guys do spot anything, do let me know because I only have one pair of eyes. Sometimes 10 people can look at the charts and see totally different things, okay? But you will only see things that you are trained to see. So I'm very trained to look for support resistance. I'm very trained to look for Fibonacci levels, trend, okay? But there are some things that I know of, but I'm not, because I don't practice it a lot. I don't spot it. I don't see the chart and immediately spot it. For example, this head and shoulder, and like, for example, a flag or a teacup or a chart patterns. Okay, so I don't really use chart patterns a lot for my own trading style. So that's why sometimes if you see it, just let me know. Okay, so RSI is basically saying that it's on an uptrend as well. Okay, let's see what MACD is saying. MACD was hoping to spot some kind of divergence, but nothing much. It's just saying it's an uptrend. Okay, right now, I am more biased that price is on an uptrend because 3 indicators are telling me it's up. Head and shoulders and the triangle where price tends to break out on the horizontal side. Okay, the only thing that's telling me it's sell is the Fibonacci levels. The Fibonacci levels and this horizontal swing high. Okay, if I'm using my usual trading strategy, I rely heavily on horizontal and Fibonacci. So calling this buy is totally not how I usually look for my setup. Okay, so usually I rely very heavily when I give priority to what information I think is accurate or good. I usually take the Fibonacci, the trend line, the horizontal levels into account first before anything else. But at this point of time, the other information is too strong to ignore. So I am a bit more biased that this is a bullish. This could be bullish, especially since if we zoom in, okay, if we zoom in, you can see green candle, green candle, green candle, green candle, green candle. There is no bearishness in this at all. Okay, there is no bearishness in this. Okay, so right now I'm biased that there's going to be a break, retest, and a continuation. Okay, there can be a break here. Usually I don't enter immediately at the break. I usually wait for the retest before I enter for the break. Okay, so what we're going to do now is wait for the break and retest. Okay, if it doesn't break and retest, then fine. We'll just take it as we missed the trade. If it break and retest, that is your signal to get into the trade for a buy. Okay, but you need to wait for a proper break, a proper retest. Wait and see how the candlestick looks like when it retests. You need to wait and see, and then get in for a buy. So the candlestick pattern that you are looking for is reversal or continuation patterns, okay? If it reached the first resistance, you need to look for reversal or continuation pattern candlesticks. For those who are not familiar with this, just Google. Just Google reversal pattern candlesticks, okay? If you see those candlesticks and if it closes green above your first resistance, that is your signal and that is your confirmation to get in for the buy, okay? This way, if we are following these steps closely, it increases your chances of getting profitable trades, okay? It increases your chances of getting profitable trades. What we want to do is get profitable trade. We're not here to enter 100 trades. That doesn't make sense. We want to enter to a few trades that make us money. Okay, we want to get into trades that make a lot of sense to us. Okay, so wait for the break, wait for the retest, wait for the candlestick pattern confirmation, then you enter. Okay, what you don't want to do is when price gets to this first resistance, you see a super red candle that breaks the first resistance and come back within this rectangle. Don't get in. Okay, that is the chart's sign to you that it doesn't want to go up anymore. It wants to come back down. Okay, so wait for the confirmation. Do you go on little time frame for taking your entry? Okay, good question, Baptist. I'm sorry. I'm just gonna assume your name's Baptist. Okay. Yes, I do. So one thing about using the bigger time frame to look for your setup, but going to the smaller time frame to look for your entry. One thing good about that is that you can play a very long trade. Okay, you can play a very long trade. So you're using the smaller time frame to get in, but your take profit is based on the bigger time frame take profit. Okay, so right now, if I'm getting in on this trade, my entry is here, the first resistance. My take profit is the second resistance. My stop loss will be based on the daily charts, okay? Based on the daily charts, my stop loss will be just slightly below the first support, okay? Slightly below the first support, okay? Because for price to even reach my stop loss, it would need to go below this swing low and it would need to break this ascending trend line before it can even touch my stop loss. And if it does touch my stop loss and it has broken two of that things, then yeah, I will lose with pride. I will gladly lose because there was reason for me to believe that price wasn't going to reach there. Okay. So yeah, if I'm based on the daily time frame, this is my setup. Okay, at this current point in time, this is my setup. But if I go to the small time frame, like the 4 hours, based on the exact same level, based on the exact same level, my take profit and my entry may be different. Okay, my entry will be the same, but my take profit and my stop loss may be different. Okay, I'll give you an example. Let me make this screen a little bigger so that you guys can actually see the candlesticks. If you're using the 4 hours, there's so many other take profit. You can take profit here. You can take profit here. You can take profit here. You can take profit. There's so many resistance along the way. But if you go back to that 4 hours, you can see that there are no resistance. Okay, it looks like a very clear. Let me get rid of all these drawings. I'm so sorry. Let me get rid of drawings. Oh no, I only want to get rid of the brush. Okay, I'm sorry guys. I'm gonna get rid of that. Okay, entry, take profit, and stop loss below the swing low. Okay, if you got a daily, you can see that there's no resistance along the way other than this. Okay, we can consider this as a resistance, intermediary resistance. Okay, this swing high is a resistance. But if you go to the smaller time frame, that smaller time frame, immediately there's so many places for you to take profit. Yikes. Let me get rid of this. I'm trying to zoom in. Okay. Yeah. So you can take profit here. That's a resistance. You can take profit here at this swing high. You can take profit at this swing high. There's so many places for you to take profit. But if you go on a bigger time frame, you immediately cancel out all that noise from the smaller time frame, and you use the bigger time frame as your take profit. So you can play a very long trade, but your entry was based on the smaller time frames. Okay, I hope that makes sense. But This example I'm using, structure looks about the same on the daily and the 4 hours for the entry. So it's not a very good example. Maybe if I go down to the 1 hour, we can get a better, yeah, same on the 1 hour. Okay, same on the 1 hour. So the example I'm trying to say is that if you go down to a small time frame, your stop loss and your take profit may be different. But in this case, the stop loss, the structure on the 4 hours looks similar to the daily. So there's not much I can say about that. Okay, so that's that. This is not usually how I find my setup. Sorry. It's because of the head and shoulder and the triangle. That's why my setup today is different. Let's go look for a charts and I'll show you guys how I usually find my setup. Okay, but that being said, even though I have a specific strategy I use for looking for my setup, it doesn't mean I should use that strategy on all charts. Okay, because if I were to use my usual strategy on EURCHF on the daily, I would not have been able to spot that buy just now. Okay, I would immediately be very biased and be very prejudiced that price is on a sell because my strategy would be telling me that it's a sell. But because as traders, we must learn to adapt to different charts and different frames. Okay, we need to learn as much as we can because different charts and different time frames will be telling us different things. Okay, so thank you so much, Jacob, for spotting that. Head and shoulders. We'll move on to the next request. Now I can go faster. I can go faster because the first chart, I always use the first charts to explain what I'm doing. The second charts, I hope you guys can follow. Okay, go to the daily. So usually when I look for setups every day. I go chart by chart by chart. I can go through about 30 charts a day, and it only takes me like 5 to 10 minutes to come up with an analysis and with a bias. Okay. Okay. One look. This is definitely a downtrend. If anyone else sees an uptrend, do let me know. I don't see an uptrend. That's the only information I'm getting on the daily charts. Okay, cool. Let's move down to the 4 hours. Okay, make it closer because we want to find a setup a bit closer. Let's highlight some support and resistance. Support right here. Resistance right here. Why is this not working? Okay, resistance right there. Price is a little far. If anything, there may have been a recent breakout right here. Okay, this is good. This breakout is good. Okay, why I think it's good? Because now we can try to play this pullback and enter for the buy. Okay. So I'm in AUD/USD long. Lily, you are right. I called for a long yesterday. I already took profit. I made a good 2% on that trade. So yes, Lily, AUD/USD is a long. But I don't know where your take profit is. My take profit is, I already hit my take profit. So I hope you get your take profit soon. Okay, so that's one thing. You want to spot support and resistance to give you any information. One thing that we achieved, it was the prices on a downtrend. Right now, we're going against trend. That's totally fine because we're playing a very small trade. We're doing a very small trade. Okay, so let's see our possible entry. Right now, we have found our bias already. Our bias is that we are hoping, because there's a little breakout here, we're hoping for price to do this reverse here and then bounce back up. Okay, where does it bounce to? The only place that I see a possible take profit, unfortunately, is up here. Okay, that makes me very, very cautious. That makes me very scared. It makes me feel like this chart, this looks a little sketchy. Okay, let's go down to the 1 hour. Okay, let's go down to the 1 hour to see if we can find any other take profit. Nothing much, to be honest. Okay. If we are based on the 4 hours, the only thing I can say is there was a recent break of this resistance. Guys, give me like a minute. I need to plug in my charger. Okay, there you go. There was a recent break of this resistance. The next resistance is this pullback right here. Not very confident with this because price is clearly on a downtrend, right? Here, price is clearly on a downtrend. So if you want to play this buy, it means you're going against trend. You're going against trend. But the good thing about this is that it is possible because it's a Euro USD. USD has so much weakness right now. It is possible. Okay, so I'm not even going to pull out the fib levels. Okay, maybe just one fib level. It's probably going to be a 23, 38, sorry, 38. That's probably the only thing I can pull out with the fib levels. I don't really see anything else. Okay, there's two fib levels lining up at our possible entry. That's a good sign. That is a good sign. We now need our stuff. Oh, okay, this is a good sign. Okay, for those who are always in my webinars, you know how I like to use the Ichimoku, right? You know how I like to use my Ichimoku. Sorry, let me just pull up the chat again. Okay, you know how I like to use the Ichimoku. So let's zoom in. Let's zoom in so I can show you guys what the Ichimoku is saying. So how I usually use the Ichimoku is that if price is below, these are for the new people here, okay? For the new people here, for the regulars, you hear me repeat this every week. So sorry, I have to repeat it again because we people every week. If price is below the cloud, it is bearish. If it's above the cloud, it is bullish. But another condition I need is that if this blue line, which is called the conversion line, is below this red line, which is called the baseline, it is bearish. If this blue line is above the red line, it is bullish. Okay, so at this current point of time, even though price is kind of below the cloud, there is one indication of trend reversal already. Okay, I'm gonna zoom in so you guys can see it. So because my eyes are more trained with Ichimoku, I saw it immediately. It makes me more confident with this buy. Okay, you see how the blue line has recently crossed the red line. The conversion line has recently crossed the red line. So whenever a conversion line crosses the red line to the upside, it's an indication. It's kind of like divergence. For those who know divergence, it's kind of like a signal from Ichimoku saying that, okay, there might be a trend reversal soon. Okay, at this point of time, we saw that price is on the downtrend. Okay, Ichimoku and this break of this resistance is showing us that there could be a possible reversal of that downtrend. So it could be a possible buy right now. Okay, so there are a lot, when you look at the chart, there's so much information. The chart's always giving you information of where price is going. Okay, if we use RSI, RSI is also saying it's on an uptrend. Okay, the way I use RSI is also saying it's on an uptrend. So that's good. That's a good sign. That is a good sign. So that's up. Ichimoku signaling a possible buy, a possible trend reversal. RSI showing bullish momentum. Let's see what stochastics is saying. $21, 5, and 3. Stochastics is at a resistance. Stochastics is at a resistance. Okay, so other than the stochastics, RSI and Ichimoku is agreeing that there could be a possible trend reversal from here. So how confident am I in the trade? Whenever I find a setup, I now ask myself, okay, so once I've decided, is it gonna reverse or is it gonna bounce? Is it gonna reverse? Yeah, is it gonna reverse or is it gonna break? So at this point in time, I don't think it's gonna break back into this area. I think it's going to bounce from here. I think it's going to reverse from here, right? That's my current bias right now. Okay, even though this is my bias right now, there are still things that I would still need confirmation. Number one, the candlestick patterns. We need to wait for price to actually touch this green line, and we need to see what the candlestick patterns say. If you see a lot of rejection, if you see a like super like a candle that comes here and then it just rejects, you see like a super strong wick, okay, it means price is rejecting this support and it wants to go back up. Okay, it wants to go back up. The only problem I have right now is this take profit. I'm clear on the entry. The entry is probable to me. It makes sense to me. The take profit is the problem. The take profit looks like, because I'm a bit more conservative, right? If you play this take profit, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles to get from here to here. It's probably going to take 15 more candles to get from here to here. Okay, 15 candles times 4 hours is 60 hours. Okay, 60 hours is like a little bit more than 2 days, I think. Yeah, it is a little bit more than 2 days. Right, so you're going to be holding this trade for 2 days, which is over the weekend, and I don't know how I would feel about that. So if you want a nearer entry, maybe go down to a smaller time frame. You can try to look for a nearer entry. Maybe even just being very conservative, you can just play it back to the swing high. That's just being very, very conservative. Okay, you're just playing it back to the swing high, to where it came from. Other than that, I don't really see any other possible take profit. Let's try to use the Fibonacci retracement to see if there are any other take profit along the way. Okay, so Fibonacci retracement. Fibonacci retracement from this top part to this bottom part. It broke the 23.6, right? It broke the 23.6. The next, it came to the 38.2 and kind of bounced back a little. After the 38.2 is the 50. Okay, so conservatively, you can play it back to the 38.2, or if you're feeling rather brave, you can try to play it to the 50%. Okay, but take note, you might end up holding this trade over the weekend. Because even for the 50%, it's like 1, 2, 3, 4, 5, 6, 7 candles. 7 times 4 hours is 28 hours. You'll be holding this trade for more than a day. Okay, if you want to do that, entirely up to you, but I'm just giving you options of where your possible take profit is. If I were to get into a trade, which I might actually get into this trade, I will just play it back to the 38.2%. Oh, right. Good. Yes. Baptist. Thank you for that. Yes, you can do your take profit back to the cloud. So the Ichimoku cloud also works as a support and resistance. So the top of this is also resistance. The bottom of this is also resistance. Price has broken the bottom part resistance. You can use this top part resistance as a take profit as well, which lines up nicely with the 50%. Okay, so yes, good one. Thank you for that. Okay, you told us about FTMO. Have you any advice for the money measuring, because 10% is a lot and the time is limited, or strategy for so how I pass FTMO and my Forex fund so many times is that the trades that I take are very good risk to reward trades. Okay, I will give you guys an example. I'm going to erase all of this. We're good that this is a possible buy, right? I'm going to get rid of everything so that I can show you guys what I'm talking about. Okay, so the trades that I get in to pass FTMO, because there's so little room of loss and you need to make 10%. Okay, you need to make 10%, but you cannot lose more than 5%. You lose 5%, they take your account immediately. They immediately take away your funding and your money. So my entry is right here, for example. My stop loss is very risky. Usually on my webinars, I will tell you guys to put your stop loss here, because it gives you breathing space. It gives you a lot of room. Okay, how I trade, my own trading style, my stop loss would be here. Okay, why my stop loss is there is because if price really came to my stop loss, I would just consider that I'm wrong already. Okay, I'll consider I'm wrong because if price really came to it has already broken this pullback support area. So if it breaks this pullback support area, I'm just going to consider that I'm wrong. But the problem with my strategy is that a lot of times price comes all the way down to my stop loss, it hits my stop loss, and then it ends up just wicking. So wicking means this long wick. Okay, it just wicks. It just comes down, wicks, and then goes back up into the correct direction I want to. So how I pass FTMO my Forex fund. Okay, I actually passed my Forex fund in 8 days. So it took me 8 trading days to get 10%. That was a very aggressive period of trading way I traded. My take profit would really be here. Okay, my take profit is this green line here. My entry is here, and my stop loss is this here, just below my entry. It could be super, super tight. My entry could be so tight. Okay, so you take a measuring to measure the risk and reward. Okay, my entry is there. My stop loss is there. I'm gonna move this here. I'm gonna pull my take profit here. Can you guys see how this would be a 1 to 8 risk to reward trade? 1 to 8. Actually, 1 to 8.6. 1 to 8.6. That means when I get 100,000 account, when they give me 100,000 account or a $1 million account, for example, okay, let's just use 100,000 because it's easier to count. I get a 100,000 account. I'm only risking $1,000 to make $8,600. So when I lose, I only lose this little portion here, but when I win big. Okay. Yes, big risk to reward trades, and that's how I managed to pass my Forex fund. I managed to get, sorry, I don't even know if it was 8 days. I think it was a week. It could have just been a 6 days kind of thing. I don't remember. I just know that I took a very short time to pass. So I got my 10% within 6 to 8 days, I think 6 or 8 days. Yeah, by using this strategy. I don't recommend this strategy because the chances of it hitting your stop loss is high. I recommend you putting your stop loss below the swing lows. Okay, so when you do this, when you move your stop loss down, now you see that it's a 1 to 1.64 risk to reward. Immediately, the risk to reward is not as good. But when you move your stop loss tighter meaning there's a higher risk of your trade hitting your stop loss, it immediately becomes crazy. It becomes 1 to 8, 1 to 10. And yes, after I got funded, I became more conservative. Okay, so this is a very aggressive way of trading. This is a very aggressive way of growing your account. Okay, it's very stressful as well. So I don't recommend this unless you are in a rush to make money. I don't recommend it. Chances of you getting burned is very high as well. So I recommend just using more breathing space, giving yourself more breathing space, not forcing a trade, just having peace of mind. I was very aggressive with this, and that's how I passed. Okay. Would you be able to go through AUD USD? Yep. Okay, time is up, but I can. I'll just quickly go through AUD USD. I called for AUD USD and gold for buy yesterday, and I'm so glad it played out. Yeah, I didn't have a webinar with you guys yesterday, so I wouldn't have been able to share that trade with you guys. So AUD USD, why does this look different? Okay, no, it doesn't look different. Sorry, because it changed a lot from yesterday. So this is the only thing that I'm just going to highlight some things that I think is useful at this current point of time. Okay, let's just highlight a few things. One is there was a recent channel breakout. Okay, there was a channel breakout here. So that's one. There's a channel breakout. So right now, because it's a breakout, I'm waiting or I'm expecting for a pullback a little pullback, and then a continuation in the direction I broke out to. But the problem with this is that I'm only just looking at AUD/USD now, right now, for the whole day. So this is all new information to me. The only problem is that this could just be another descending trend line. Okay. It is possible that yes, it was a buy from here, but this was the limit. This was a take profit. It's possible that this was just a take profit, and from here you're supposed to sell already. Okay, it's possible, but let's try to analyze this a bit to see what our bias is. Okay, right now, just take note that there is a descending trend line here. I didn't see this yesterday, but I'm seeing it now. It's not the best descending trend line, but I would acknowledge that it is quite a valid one because all 3 points touched or barely touched. Okay. Okay, this one thing you really, really need to consider, because if this is a valid descending trend line, it just means that price is going to reverse from here. There may be a chance that price is not going to go high. Okay, there may be a chance depending on how strong and how well price respects this descending trend line as well. Okay, so let's just go to the bigger time frames right now to see if we can get any other information. Bigger time frame. Oh, yikes! If anything, on the bigger time frame, it's bearish. I got into the buy yesterday because I saw divergence on RSI. There was a breakout of the channel. There was divergence on the RSI. There was a breakout on stochastics. There was just a lot of signs of breakout. If I use my normal trading strategy, which is to prioritize support and resistance, then I would have sold yesterday. But thank goodness, I spotted the divergence. Okay, so if anything, on the bigger time frame, it actually looks like it's a sell. Do you guys see this trend line breakout on the daily charts? On the daily charts, it could just be this. It could just be this price back here and then just dropping. Because usually when there's a trend line breakout, there's a trend line breakout. After the breakout, there's a pullback, and after the pullback, it continues in that direction. Okay, so this is a very this is a tricky one. I actually did not see this yesterday. I tend to pick very good zones from where to take my trades. Almost always there's a reaction, but I have problems with confirming a trade. Do you have any tips besides candlesticks formation? At this current point in time, I only have candlesticks confirmation and using RSI, MACD, and stochastics to spot divergences. The minute I see a divergence, I don't enter the trade. So let's say I'm looking to buy. Okay, yesterday I was looking to sell AUD/USD, but because I wanted more confirmation, I looked at these 3 indicators, and these 3 indicators were showing me divergence. That means even though my charts were saying that it's a sell, all 3 of the indicator was telling me it's a buy. So immediately it made me feel like, okay, I shouldn't get into this trade. It's either I shouldn't get into this trade or I should consider the buy. But definitely the sell is a no-no anymore because there's too many signs telling me that it's a buy. So the more things that you use for confirmation, like you can use indicators. Yeah, to answer your question, you can use indicators to confirm whether you get into this trade. Okay, this looks a little tricky. Okay, this actually on the daily actually looks like a downtrend. It looks like a break of the trend line. It looks like price is going up here, could possibly come up here to retest this trend line and then reverse from here. Okay. On the 4 hours, I mean, if it breaks this on the 4 hours, there's a descending trend line. So short-term buy, long-term buy, long-term sell, short-term. I mean, it's at a descending trend line now, so it could possibly even short-term sell already. But on the daily, it looks like, okay, yeah, this is why I got out of this trade. My take profit was actually here. I got out here and I didn't enter anymore because I'm not sure anymore. Okay, so at this point in time, I'm not very sure as well. The only thing I can confirm with AUD USD at this current point of time is that I think it's a long-term sell because of this. Okay, I think it's a long-term sell. It's a longer-term sell. It might be approaching a support soon. If I have to call a trade on AUD USD at this current point of time, I wouldn't anymore. I think the good trade was yesterday. Okay, I entered here for a buy. Oh, sorry, no, I didn't enter here for a buy. Oh yeah, I did enter here for a buy, and I got out here. I got out here for my take profit. Okay, I play very short trades, but at this current point of time, I don't see any probable trades because of conflicting information. I want to look for a buy entry, but right now it's at a descending trend line resistance. Okay, so if anything, at this current point of time, I'm more biased that it is a sell, at least the sell, a very short-term sell. There's a possibility it's a short-term sell back to this trend line or back to this swing high. Or what? Oh, sorry. Yeah, maybe back to this trend line. Okay, so this is my very big bias. Let's try to back it up with other things. Let's try to back it up. Okay, why things to sell, descending trend line. Let's see what all the other stuff are saying. I'm sure if I change this to 21, 5, and 3 is at a resistance. Yep, it's approaching a resistance. It's approaching a resistance. I'm more biased that this is a sell right now. Just a very a short-term sell at least. At least there's a short-term sell. So that's the only thing I will give you guys for AUD USD. Let me see if I can get some kind of entry for that sell. Possible entry for sell, possible take profit, or if not, take profit could be lower, which is closer to that channel. Because it usually retest the channel. Okay. Stop loss, if I were to play this, super tight. Super tight stop loss. Okay. Right now, it looks like it's already on its way down to the take profit. Okay, it looks like it's already on the way down to its take profit. Let me see if I can find any confluence, okay, to confirm this sell. If there are a lot of levels lining up here, then I'm a bit more confident with this sell. 50% lining up. 1, 2, 3. There should be an overextension. Overextension is maybe the 200 level. Yep, there is a 200 lining up there. That's an overextension. Lines up closely with the 50%. There should be a Fibonacci extension as well of the 161. Where is my 161? Yikes, where is my 161? There you are. Okay, maybe not, maybe 127. Okay, nope. They are Fibonacci levels here, but they're not lining up very close to each other. So it's not saying a lot to me. It's not saying that, wow, this is a very strong resistance, price going to reverse from here. Okay, I have a very weak bearish or a medium to weak bearish bias on this. Bearish bias, that is just a short-term sell to either this level or this level, okay? If you want to get in on this, just take note that price is already on its way down. I personally wouldn't get in on this. I would have gotten in here where this candlestick was, there's this candlestick right here. Is that a hammer? I think that's a hammer. I cannot really see, it's so tiny. Okay, yeah, where that hammer formed, I would have gotten in the hammer, not here. But it does look like price is pulling back a little. If you want to consider this, you can get in if price pulls back a bit more at a better price. My stop loss super tight. Why? Because if I'm wrong, I want to get it wrong fast. I want to get it wrong fast. Okay. Again, not very confident with this trade, but if you want to, you can consider it. Okay, yeah, that's all I have for you guys today. Thanks for attending my webinar. I will see you guys on, when am I taking you guys again? I think it's on Monday or Tuesday. I'm not sure if I'm taking you guys on Monday. Oh yes, I am taking you guys on Monday for news updates. So I will see you guys on Monday. Thanks for joining, everyone. Thanks, Baptist. Thanks, Jacob, Rody, Lily, Martha, Sarah, Sight. Yeah, I will see you guys again next week. And thanks, Pendejo and Rody and Richard, of course. Okay, I will see you guys again next week. I hope you guys are able to implement something into your own trading style. Okay. Bye, guys. Oh, yes. Please like and share this video because it will help the algorithm so much. And if it helps the algorithm, Vantage will be more than willing to let us take more of these webinars and I get to see you guys more often. Okay, so please do like and share. I'll see you guys next